Closing Beat, everybody. Happy Thursday. How you doing out there? Hope everybody's doing all right. Welcome to our show. It's a quick stock market update that we do every day for our customers here at Jazz Wealth, as well as those of you that like to follow along. I'll do like I always do, go through the data here for you today, let you know what things are going on, and then I'll take a look at your questions. I apologize for the noise ahead of time. It is as windy as it has ever been here in this small little area that we live. I don't know why. It's a windy day, so there's going to be some squeaks and noises that you hear from way up at the top there. Not much I can do about it today. Anyways, tonight we've got our class for our customers in the dojo. Go ahead and go over to the dojo. I'll pop up live right at 8 o'clock tonight. We're going to do something we've never done today. We're going to show some data in a different way that we've never been able to do before and go over all sorts of geeky stuff to try to highlight, is this the bottom of, did the markets make a bottom or not? Which is kind of fitting because today is actually the anniversary of the virus bottom, which we'll cover in a second. Also, there is no closing beat for tomorrow. We're going to take the day off there. We'll be back on Monday. But we've got like the world's funniest video going up at 1 o'clock tomorrow. I guess I don't work them hard enough here because they took a lot of my clips from over the years and they did an unnecessary censorship, and I cried. I was laughing so hard I cried. It's really funny. It's about a minute long. We'll post it tomorrow on YouTube there once it's done. But really good. We're also playing Guess the Dow. If you want to tell me where you think the Dow is going to close next week, if you're the closest without going over, we'll send you a $100 gift card. And our jazz artist of the week is Art Blakey. He's got a song called Dat Dare. It's from the album, it's from the Big Beat album, actually. Really cool cover if you have that record. I do, but didn't have it here. Nope, don't have it here for you. Anyways, let's get started here. We'll talk about the markets here today. You got the S&P 500 on the screen there, continuing to be in the chop zone. I'm going to say this every day until we work our way out of it. It happens to be the anniversary of the virus low, as we talked about. Probably an anniversary that's okay if you want to forget this anniversary, but here's where we stand since March 23rd, hitting the low in the markets, the major indices. The Dow has the best performance there, gaining 26.39%, 25 for the S&P, 23 for the NASDAQ, and unfortunately 21 only for the Russell. That one is lagging behind overall. The S&P 500 is back to the 50-day moving average. It is pulling back a little bit here after hours. At one point it was above the 50-day today. We were up as much as 1.6% on the day before starting to give that back. We had that Gilead news came out, which I talked about already, April 17th. I put it on, we were talking about it here on the closing beat, about how that study wasn't very accurate. Gilead was responding today to a different study, but they disagreed with that one as well, that the remdesivir didn't have any real impact on virus treatment there. So we'll see what happens there. We also had initial jobless claims come in at 4.4 million. Holy cow. There's the chart if you want to take a look at it. We can make it bigger. Why not? There you go. 4.4 million. This is the fourth week in a row that we've declined. So the stock market was higher on that news that we maybe have peaked out on initial jobless claims. Everybody that has at least filed has filed. I don't know of really anybody that's getting their benefits there. In the state of Florida, it's somewhere north of 60% of people have yet to be paid from that, which I kind of think is intentional there. But hey, that's still a lot of people. We've got a lot of people filing initial jobless claims there. But the fact that it was declining was good news for the stock market here today. Everybody was happy with that. If you look at the stock market overall, major indices, the Russell 2000 was the strongest on the day. The S&P was officially the weakest, but the Russell is the weakest long term. The NASDAQ at one point did turn positive year to date, but closed just below that. It's about 0.7% away from being positive year to date. So on a closing basis, didn't quite take care of that. The market, like I said, got whacked in the middle of the day thanks to that Gilead news there, which we talked about on a closing beat before, so no need to go through that. Technically, we were flat on the day, right? No, we were down just a touch. So if we go back to the turnaround Tuesday stats, this one it's got to go down as a negative because the data that I'm using here is from the S&P 500. 66% of the time, Thursdays turned positive for the S&P 500, but didn't do it today. Actually, the average return for Thursdays is just 0.28% to the downside there. Tuesdays being the only day that's positive. If you've been hanging out with us here the last couple of days, then you know what's going on there. Also, I want to point out that 50% of all investors surveyed in the AAII survey, which comes out weekly, I believe it's weekly, are bearish, right? So as the markets move higher, here's what you got. You got 50%, that's the purple line there. 50% of all investors are currently bearish of the market. 24% of them are bullish. The rest of them are neutral currently. So you can see in the orange what the stock market has done, moved back up here, this really sharp bounce that we've been talking about, V-shaped bottom, and you have investors mostly bearish at this point. The last time we were bearish was during that drop, remember, October, November, December of 2019, when 2018, sorry, when almost nobody noticed that the stock market fell over 20%. That's the last time people were that bearish, was almost perfectly at those lows. What happened after that? The market left you in the dust. Everybody had to begin become bullish again. So that's what you have for that as that goes. Our FinTips video yesterday was on dependable dividend stocks, not the highest paying dividend stocks, but the most dependable dividend paying stocks out there. Outside the virus yesterday, we talked about how Morgan Stanley was using nitrogen dioxide to predict that Apple was actually a buy at this point through the rest of the year. Today on Outside the Virus, we talked about we had some data maybe we weren't supposed to get, and we talked about how these budgeting apps are actually tracking what you're doing and your spending and everything, and more importantly, how are they using it? Who are they selling it to, and why are they selling it to them? So we went over some of the data on that. Very impressive, I thought. I just thought that was super cool how they use the data there. We don't use data in any way or sell it or keep it in any way. The Guess the Dow information that you give us, we have to save a record for it in case we're audited by the SEC one day, but we do not sell it, rent it, give it to anybody else. And if you use Nest Egg, which is our personal finance, it's like our financial planning software there, we do not buy, sell, give any of your information to anybody. So it's not us that I was talking about. It was another popular one, more popular than us, I should say. All right, let's go into the sectors here today. Mixed day today overall for the sectors. You had 6 sectors higher, 5 sectors lower, a little bit split. You can understand that. Stock market was basically flat on the day, kind of split between what was going on there. We go over your month-to-date breakdown here. This is what we talked about yesterday. We were talking about all the different sectors, where they stand, energy being the best performer. This is what it looked like yesterday, and here we go. This is what it looks like today. You got industrials taking the spot away from financials. Financials officially the worst performing sector on the month so far. And you've got energy nearing a 20% gain. It may have almost hit that by the end of the day there, but you can kind of see the change from day to day if you like the month to date sector breakdown. We'll go over to energy. Oh, no. That's the way it goes right there. Energy, good day today, 3.2%. That was largely thanks to Chevron. There you go. Chevron with a 2% gain, and ExxonMobil inside the XLE. Chevron and ExxonMobil make up about 45% of this ETF. So basically whatever they do is whatever this sector is going to do. Very hard for anything else to happen. Utilities were your laggard today, down 1.6% on the day. It was basically broad weakness across the board. However, an interesting thing to point out, Southern was down about 0.5% on the day. They raised their dividend from 62 cents to 64 cents, about a 4.6% yield, somewhere in there. They raised it for the 19th straight year. So if you're looking for that consistent dividend-paying stock that is actually still paying their dividends and has a history of doing so, I don't know that this is a stock you want to pick, but I just want to point out what they announced today, because that's the kind of stuff we like to cover. You got industrials today, about 0.75% there. It was a broad rally. This is a more equal weighted ETF, and I've been talking about that a lot lately because a lot of people just pick an ETF and they go, it's Vanguard, I'll just pick that. I'm not saying they're bad, but I mean, you want to look around and see how things are. So when we look at the ETFs overall, remember yesterday we talked about the S&P 500 and how that was weighted, and I use this chart to show Amazon, Apple, and Microsoft make up a big portion of the S&P 500. Top 5 names actually make up over 20%. So the further to the right you go, the more impact it has on the ETF, or in this case, the index. If we look at the XLI, which is the industrials today, you could see a much more even spread, right? It's a great visual to just kind of see, okay, I'm buying something where I've got real diversification. I'm not invested in just a couple stocks like we talked about in a minute ago with XLE being 45% 2 stocks. I've got something that's a little bit more broad-based here. You can see the names on the screen there. Hopefully it's nice and clear. I'll make it a little bit bigger for you. But basically, this is the today performance of each individual stock relative to how much contribution it's made towards the XLI. So the y-axis is the gain or loss on the day, and the x-axis is how much impact it has on that ETF. So stocks more to the left over here basically have little to no impact, and the stocks all the way to the right, Union Pacific, Honeywell, Lockheed Martin, they have more of an impact on that ETF if you're curious. I don't know if this is something you guys dig, but you know, the geek inside of me just gets going every day and I start making stuff. Financials down about 0.5% today. Remember, they are officially the worst performing sector for the month already. They are the second weakest year to date. You can imagine energy is the worst year to date. Speaking of energy and oil, let's go over to USO. There you go. All right, USO up 5% on the day. The price of crude oil up 22%. Wait a minute, there's a bit of a disconnect there. We've been talking about this every day here for you, and the reason why, there's still a significant premium inside the USO, and that continues to stay that way. If we take a look, there it is. Here is the actual premium in percentage terms for the USO reporting here for you. I'm going to make this bigger. You don't need to, who cares about all that? There you go. So here's the price in purple of the United States Oil Fund, the ETF USO, and here is the premium in terms of percentages you are paying. If you don't understand what all this means, just know that the higher that orange line, the more overpriced the stock is. Even though the stock's falling, or the USO is falling, it seems like that shouldn't be the case, but in this case, even though it's falling, it is still overvalued in the short term. That will fix itself. Don't worry about that. Everything will be fine. But in the meantime, if you're thinking about buying it, you are paying 30% more than what that vehicle is actually worth at this moment. We talked about it in great detail yesterday, so I'll let you look back if you want to look at that, because I took a lot of time on that one yesterday. Hopefully you found that helpful. All right, taking a look forward here, you got 7 new highs on the day. A lot of them are going to be names, actually almost all of them were names we saw hit new highs yesterday. Newmont with the higher gold prices today, Johnson & Johnson hitting new highs, and Eli Lilly, just a few that stand out as really, really strong actually in the short term. You had one new low, that would be Invesco. IVZ is the symbol. It made new 52-week lows on a severe amount of extra volume there. Earnings, the reason why was earnings today, and also they cut their dividend, which is a shame because that was a pretty sizable dividend that they were paying out. They cut that dividend, so if you happen to have that in any of your funds or ETFs or anything, it's likely going to get the boot coming up. All right, let's talk about virus-related stocks here. I got some interesting things to share with you. We'll go through it here. Citrix down 6% on the day. They actually saw a surge in demand from people working from home. It was largely expected, so it was buy the rumor, sell the news sort of thing. Discover Financial lost 1% on the day. They set aside $1.8 billion for credit losses. Previously, they set aside like $990 million, somewhere in there. They doubled it. They went to 1.8. This is basically money they're putting aside in anticipation of you not paying your credit card bill or whoever has a Discover card. Nope. GPS is the symbol for Gap. I always do that. I type Gap. That's what their symbol should be, but that's another symbol. Down just a little bit on the day. They're going to draw down $500 million on their credit card, and they're actually looking for more funding. They are in big trouble. There you go. You got Monarch Casino a little bit higher on the day. They missed on earnings, missed on revenue. Revenue was down 13% overall. They were pretty optimistic going forward there. They've got some choices on their credit lines that they're going to be drawing down as well, so they'll be back in the news anytime soon. Foot Locker to furlough their employees there. It's going to stop. It's also going to stop doing their share buybacks. There are a lot of companies doing that. Thought about doing a video on like which companies that'll help and which companies it's going to expose, because these share buybacks, it's a bit of a finance. It's a balance sheet trick, basically, and we all know it. We're not like, I'm not saying there's a conspiracy or anything. They know what they're doing. Everybody knows what they're doing. But what we were thinking about was running a scan to try to see what companies bought shares back but didn't have to raise debt to do so. Because a lot of times companies will take on extra debt, and why not? Debt's cheap, I can understand that. But they take on debt, they use their cash to buy back shares, and they just say, well, I'll take the debt at 2% or 1% or whatever, and I'll buy back our shares. But to buy back the shares, you've got essentially less shares exposed, so when you have your total earnings, divide that by a now smaller number of shares, voila, all of a sudden you beat on earnings and it looks great. So maybe that's something we can cover in detail. Let me know if that's, am I off base here? I never know what you guys like to see. I read the comments and stuff. I can't answer them, but if that's something interesting, we could run a scan and see which companies have actually bought back shares, but they used free cash to do so and either maybe still paid a dividend or were still able to operate without taking on more debt. Lazy Boy is going to assume partial reduction at their partial production at their plants. I'm not sure why. Who's buying? A Lazy Boy. Spirit Realty, here's our kind of focus stock of the day. Spirit Realty, they had a headline came out and said, this is a REIT, by the way. They said, we expect to receive 69% of our April rent by the end of April. So I read that and I'm like, 69% seems pretty high considering we're all assuming doom and gloom. And then I went, wait a minute, rent was due on the 1st. So this means that whatever companies that they're working with, they haven't got the rent yet, but they said they're going to get about 70% of the rent by the end of the month. That means somebody out there is late on rent. So we did a little research and we said, well, who's late on rent? Let's go diving into this here real quick. This REIT currently has the following tenants. They have companies as tenants here. They do a lot of the retail spaces there. And so what we did is we took their top 10 tenants and we said, well, maybe these are the people that are running late on their rent. Church's Chicken makes up 2.9% of their revenue. Walgreens, Home Depot, Circle K. You got GPM Investments, not really a public company. At Home, Dollar Tree, CVS, Lifetime Fitness. We can understand that one actually being late on their rent. And Party City. So this is not official, but it gives you a little bit of a hint as to who's running late on their rent, right? Now, to be fair, Home Depot, it's not the actual Home Depot stores, by the way. It's their call centers, right? So they rent that space out from SRC. And so just thought that'd be interesting. You guys like the REITs? You like to dive into the REITs? I like researching them with you as well. Here's a different take on that, right? Maybe something you wouldn't get to see in other places, which may cause you to hit the subscribe button. I don't know. I'm supposed to ask you to say that. Subscribe button, thumbs up, all that great stuff. Nonetheless, the stock was basically flat today. It's extremely weak, so I'm not saying this is a buy or a sell or anything at the moment. It's a very weak stock overall, but something now you have a little bit more research on. Tyson up a little bit on the day. They're going to voluntarily close their fresh meat plants for virus testing. They're having some issues there. Zoom was in the news and hit new 52-week highs as well, up 12%. They said that they added 50% more users just in the last 3 weeks. They now have over 300 million users. Yikes. Beyond Meat's got a pop today of 12%. They've accepted a $150 million credit card line of credit to help them continue their operations. They said nothing about being weak. They just said, hey, this will help further facilitate our growth. Really? Yeah, you sure? Delta Airlines, basically flat on the day. They are offering up senior secured notes and a new credit line. I think you can participate in that. I didn't quite get the response I was looking for when I asked. I still haven't got it. All right, moving on. Last one here, the Illinois governor. Oh, I hope this doesn't happen in Florida. The governor of Illinois said, you know what, we're going to keep the shutdown in effect until the end of May. And the actual response was through May, so potentially even further. Could you imagine? Oh man, I know we're all just chomping at the bit. We want to be healthy. We don't want to all get sick, but through the end of May. Oh my gosh, we're not even done with April yet. That kills me. I hate to see that. I feel bad for those people. I don't mean I hate to see it. I feel bad for people who got to be cooped up now still for another month and a week. Intel down a little bit, but after hours, I believe it's trading even lower. Is it 59? So if you were to look at a chart, here's where Intel's trading right about the 200-day moving average. Came out with earnings. They beat on earnings, beat on revenue. PC was higher sales. They missed their guidance for this quarter, and they took away their guidance for the rest of the year. I'm guessing some of that has to do with why it's down after hours. And lastly, you got Avis here. Actually, shares were pretty flat on the day. They lowered guidance. They said, man, car rental business is severely weak. To put a number to it, they said their revenue in April alone was down 80%. 80%. There's an Enterprise on the way home for me, and that parking lot is filled. Cars everywhere. I mean, like they have no places to park these cars. It's unfortunate, but It's a sign of the times. All right, earnings tomorrow. You got American Airlines in the morning, AutoNation, and American Express. Also, Goodyear Tire. And then Verizon will be the last to report in the morning if you're interested in the earnings plays out there. And dividend, ONEOK is the only one paying the dividend tomorrow, or not paying it, but it's ex-dividend tomorrow of 94 cents. Actually, it wasn't too bad. I will take your... I'll take your questions if you have any and do what I can to try to answer, but we'll see what we can do here. I had to squeeze in a little bit of a political comment, huh? I'm not going there. Isn't that weird? It's election season and we're not even talking about the election. A lot of cash, yeah, you're right. Yeah, that's been going around. The World Wrestling, that's an essential business. They got a lot of grief for that. Yeah, but not the other one. We have another one, too. I forget what it's called. Impact Wrestling or something like that. They always do it at Universal, and they try to get you to go in there. They did not get included. Yeah. Why is the JETS ETF no longer available to purchase on Cash Apple? I'm not sure what that part means. The JETS ETF is still there. If there's a platform that you're not able to buy it on, I can't give you the answer to that one. I'm not sure. That one I do not know. When do you expect USO to recover? So number one, they made their changes by scaling out to the future contracts. That costs you money, and we saw that impact yesterday. That 10% drop, even though oil was higher, that was your fee. That was essentially your fee to participate in that. A wild, wild fee, 10% to participate. So when you look at an ETF and you go, well, that's the expense ratio. It's not very high. No. Don't fall for that. I don't do a lot of videos on that because it's not something that people really understand, and I fear and pretty much assume and understand that people will not get that, and they will assume that I'm making up stuff to try to get business or something. So I don't really touch on that. Interestingly, if you look at the expense ratio on USO, it seems rather attractive because the expense ratio is actually a credit of 0.2%. It doesn't cost you 0.2%, it's a credit. So they're paying you to invest in it. Sadly, they're not paying you enough considering the cost to carry that product there. So very careful there. So you like the buyback idea? Yeah, maybe we'll put that together. Use it as a topic next week or something. Yeah. You like the oil tanker funds? Careful on those. Those are, you got to make sure when you look those up. I don't have any good ones to pull up or show you, but I know, maybe I can get them. But I know you want to look at those and see what the holdings are. A lot of those only have a handful of holdings. So you might be better off just buying the individual stocks if there's one where you want to maybe eliminate a stock or something you disagree with, and it's not going to come up. I can maybe explore that. There's the noise. Man, if you could only see how, it's like there's a hurricane. I mean, it's like there's a hurricane going through. Sorry. I don't like leveraged ETFs. Nope. Don't. Leveraged ETFs are for day-to-day trades only. The ETF themselves, in their prospectus, will tell you only for overnight trades. Do not hold them for any, and that's because of the carrying cost. It just costs that much. Now today's gain, if you look at a chart on like that JNUG, you're going to see this on USO as well. That's not actually a gain. Don't let that fall for. That's the reverse split. That's what's going to happen on USO. I don't have the date for you there, but they did a reverse split here. This company, by the way, Direction Funds, they actually reverse split 12 different ETFs. So if you happen to be a fan of Direction Funds, you're going to see this on a chart. The chart will likely fix itself tomorrow or the next day or something. So it's not a big deal there. Yep. No, I don't acknowledge downgrades on Disney. I just skip right over them there. I know S&P dropped their credit rating. Let's see if I can find it for you. They still have a great credit rating. So they're now down to A minus. You know, it's a respectful rating. There's nothing bad there. About 50% of their revenue is coming from the Disney Plus, but sadly 50% comes from parks and things like that, and ESPN and things. Yeah, I mean, it's an honest downgrade. You can't blame them. I don't agree with it, but I'd be the one guy at S&P going, "No, you downgrade, get out of here." Yeah. Thoughts to buy VXX if you believe the market will go down. That's a volatility product. Now, VXX does not have to go up if the market goes down. It's not a perfect correlation. VXX is a measure of the puts that are being bought on the S&P, and the VXX is actually a second derivative. So careful there. VXX is actually a play on the VIX, and the VIX is a play on the amount of puts bought on the S&P. So you're 2 steps away from what's actually happening. The market can go down, and VIX doesn't have to go up. So a lot of people say it's the fear index. Well, but defined by the puts bought on the S&P. So there are many times the stock market can fall and your VIX is just sitting there and you're like, what's going on? Because it's a normal pullback that people aren't scared of, they just accept as a normal thing there. In this environment with volatility the way it's at, I could understand if you thought that was a vehicle to take a shot on. I cannot tell you to do that though. It's Disney. That's right, man. It's Disney. You blame Disney. Yeah. I love it. Well, I think I've done my part here. No, let me see. I did. I covered everything I want to cover. Thank you for putting up with the noise today. That should take care of itself tomorrow because we don't usually have wind and storms for very long. But I wish you the better rest of your day there. We'll be back later, 8 o'clock tonight, to do the Wine and Wealth with our customers. And we're going to do some focus on the market making a new low by looking at statistics, looking at history. And I'm going to show it in the most simple way that's ever been shown, and also in a different way than we've ever been able to show before. So I'm pretty excited. Grab a drink. Come hang out with us tonight, 8 o'clock tonight. We'll get that started and enjoy the rest of your day. Thanks for watching.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.